When you track the data, what are you looking for in these job numbers?
Yeah, thank you so much for having me, Ed. I'm generally looking at the data. I'm looking at what are the sectors that are driving the growth that we're seeing? And we're seeing pretty consistently healthcare has been a big driver of job growth across the US economy. In this past month, we also saw retail, warehouse, and transportation as well continue to be a big driver in job growth. Some of the other things we think about and consider as well are wage increases. So wage increased by 0.2% in the last month, a little lower than we anticipated. And we also look at other numbers like what are the openings that we see, the job openings. And so the JOLTS report came out on Wednesday, and those continue to be relatively healthy and stable. And so those are some of the numbers that we're generally looking at when we're looking deeply into these labor market reports.
Right. Did you learn anything about the technology sector this morning?
Yeah, I mean, when it came to the technology sector, it's a little bit of a tale of two cities. There's a bit of a cognitive dissonance when you look at the labor market reports. At a high level, you see unemployment continues to be under 4%, and that's for the 27th consecutive month. You continue to see high demand across some of these key industries, like I mentioned. Now, you look at the technology sector, more deeply at the technology sector, job postings for most tech jobs are below 25% from pre-pandemic. There's still quite a bit of a lag in the tech sector in terms of seeing that increased demand. And you see folks that have been laid off over the past year continue to struggle to find access to jobs, particularly if they're in non-technical roles. So think operations, finance, human resources in these large tech companies. And it's a hard pill to swallow because when we looked at the earning reports for the past quarter, seen over the last week, whether it's Meta, Microsoft, Alphabet, they're actually quite strong, but they're also showing discipline around maintaining operational efficiencies. And so we haven't yet seen that resurgence in the same way that we see the strength of the labor market across these other industries.
Actually, Jomayra, hold that thought. Earlier today, we spoke to, or yesterday rather, Savita Subramanian at Bank of America. Just listen to her thesis real quick.
Look, who's going to benefit from all these chips and this AI and, automation? It's old economy companies that get more labor light. And I think that's the benefit that we could see over the next, 12 to 24 to, few years. I think the areas are, industries like ours, the banks, right? I mean, banks are very labor intensive. Now there is this tool that we can use to replace people with bots and processes, et cetera.
So taking your read of the technology sector and what Savita just said, I think you agree with each other about the direction of travel right now, about what's happening in jobs in the technology sector, and then how technology is impacting basically old school economy.
Completely and totally. I think what's really interesting, whenever you have a large technology shift, oftentimes we're very, very good at predicting what jobs we're going to lose. We're very, very bad at predicting what jobs are going to be created. And so in this short-term period, what we're seeing and what we're going to feel is increased automation around tasks that right now people are doing. And that will be a net productivity gain for the economy. But there is going to be some real labor market pain that is felt by employees in the short term. But over time, what we'll see is employees will be able to lean into really human tasks, and there will be new jobs created in ways that we really can't anticipate right now.